Right. Can you guys hear me? Can somebody just let me know in the chat there? You can hear me loud and clearly? Okay, thank you, Paulette. Thank you, Lee. All right, glad to hear it. Glad to hear it. Okay, awesome stuff. So, what I want us to do today, as you guys know, we have finished the syllabus for today. I mean, for this module, right? So since we have actually finished the syllabus, now we're just going to be revising. So for today, what I want us to do is I want us to revise your test that you wrote quite recently. Okay. So I want us to start off by revising question. We're going to start with revising question 3 of your test. Okay, and then from there we'll then move on to the other sections of the test. Okay. Yes. Yeah, let's start with question 3. All right, so as always, I always start off by reading the required. They said generalize the adjustments for the year ended 31 July 2020. All right. And I would have loved to actually do this in class because it would have been nice to get your interaction whilst doing this. But obviously, we have to take what we are given. So we'll just have to rock with this as is. Okay. So they said no document numbers or folio numbers are required. No journal narrations are required. No closing entries are required. Round off to the nearest rand. Show all workings. Okay. All right. So that's what we need. We need to do what? Journalize the adjustments for the year ended 31 July. Okay, cool. Then up top it says the following balances, amongst others, appear in the books of Lemon Traders at the end of the financial year ended 31 July 2020. The balances are prior to any year-end adjustments being processed. Lemon Traders uses the perpetual inventory system. Okay, so there we have our pre-adjustment trial balance, and there it says first adjustment there for the year, depreciation must be written off on machinery according to the straight line method. Okay, machinery has a useful life of 5 years. Additional machinery was purchased for 23,000, including VAT. All right, on the 1st of July. Okay, just trying to quickly grab a calculator, so I have one near me. Okay. Okay, cool. Right. All right. The new machinery has been recorded in the accounting records. No machinery was sold during the year. Okay, cool. All right. So let's deal with that right away. Okay. So let's go to our, here's where we have our question 1. Ignore this bit over here. Oh, this is for the exam. Okay, this is question 1. Okay. Now what you want to do here is you want to build your timelines. Okay. Remember, it's on straight line method. Okay, so we know that the old machinery, okay, actually, sorry. let's do this. Drawings, yes. Here's our pen. So we know that we're doing this for the financial year. First, this is for 31 July 2020, okay? So the financial year will begin on the 1st of August 20. Just gonna put 20. Oh, sorry. It's gonna begin on the 1st of August 19. Okay. And we are doing this until 31 July 20. Okay. And when did we buy this new material? I mean, this new machinery? On the 1st. I'm just going to put it in red. 1st of July 20. Okay. So, and we bought that for 23,000, but that's 23K inclusive of that. Okay. So remember, when we're doing depreciation, we have to do it exclusive of that. And they've told us that our total on vehicles is 350K on the 31st of July. So first things first, we know that this new machinery is included in here. Okay. So, but first things first, we know we have to get exclusive of that amount here. So we're going to say 23,000 times 15. Or we want exclusive, so let's just get the exclusive amount. So 100 over 115 gives us what? Okay. Okay, that gives you 20,000. Okay, all right. So already we can calculate depreciation on this new vehicle. So we can say 20,000 then times, what is the depreciation rate? They don't give it to us. They say depreciation is over 5 years. Okay, so that's fine. So we then just divide. Let me erase this then. We then just divide by 5. Okay. But again, can you see this is only for 1 month? This is only for 1 month. So we would then have to times by 1 over 12. Us dividing by 5 here, we're already calculating how much depreciation every one of these 5 years. Okay, then we're saying times 1 over 12, we're now apportioning for that 1 month. Okay, so this will then give you, let's see, how much will this give us? Times 1. Sorry, divided by 5. It's 4,000, then times 1 divided by 12. Okay, so I'm getting 3, 3, 3. They said round off to the nearest rand. Otherwise, we'll have endless threes over there. Then, now remember, we have to do the depreciation. This is depreciation on the new. Okay, we still need to do depreciation on the old stuff. Okay, so we then have to say 350,000 minus 20,000 will obviously then give us 330,000. Okay, remember they said the useful life is 5 years, so we say divided by 5. Remember it's on straight line method, so we don't need to use accumulated depreciation. Okay, and this was for a full 12 months. Okay, so already we'll have how much it depreciated by. So 330 divided by 5 is going to give you 66,000. Okay, so now the total depreciation there is then going to be that's 66,000 plus the 333. Okay, so we now know that here in our journal we're going to have depreciation, and this is obviously depreciation on machinery. I think I was saying vehicles whole time, and accumulated depreciation. Again on machinery. Okay, and this is now the 66 plus the 333. 6333. There we go. So that's the first adjustment done and dusted. Let's go to the second one. Guys, if you have any questions, please do ask. Please do feel free to ask. That's what these revision sessions are for. Okay. Let's go back to our question paper. So that was the first one. We go to the second one. It says, according to the physical stock take at year end, the following was on hand. Trading inventory, 96,000. Okay. But if we look at trading inventory over here, we have 98,000. So somebody tell me which accounts they are affected with the trading inventory. Okay, we're 2,000 short of what is actually in our books. Can you see that? 98, and here we have 96. Then packaging materials, they say 700 was on hand. Okay, what's going to happen to packaging material? Because here we have 900 as an expense for packaging material. Somebody tell me then in the chat, what are we supposed to then do in those instances? Okay. Right, just in the interest of time, I'm going to push along. So with trading inventory, it's going down. Okay, there's a discrepancy there. So cost of sales is going to be debited, okay, by 2,000. Okay, and then trading inventory is going to be credited by 2,000. Okay, and remember they said no need for narrations. Okay, so we've dealt with that. But now remember we have packaging material where we have on hand 700 Rand. Okay. So in that case, what are we supposed to do over there? Okay. Remember, there it's consumable stores on hand. On hand. Okay. Remember, this is a current asset. Okay. What we're saying is that we can sell this packaging material if we liquidate the company. So we then treat that as a current asset. Okay. So here we're saying 700, and here we're saying 700. Oops. Okay. I think at this point, the general journal is something that you guys should be very comfortable with. Okay, I think we've done so much of that, not only in 1A, but also in 1B. Okay, let's go back to our question and see what they're asking there. Next bit, they said wages and salaries for the month of July was not paid, 500 Rand. So if we have not paid something that we were supposed to pay, which account is going to be affected? Your accrued expenses is going to be affected. Okay, and accrued expenses, we know it's a current liability. All right, so here, salaries and wages, I'm just going to put S and W just to save time, 500. Okay, and then here, we know it's accrued expense. Okay, and they were also putting, remember, this is a current liability, 500 Rand. Okay, right. Right, perfect, perfect, perfect. Then we go to the next one. It says rent income per month. All right. Hey, why is this thing popping up? Rent income per month was 2,000 for the first 6 months. And then it was increased by 50% for the second 6 months. Okay. There was no rent outstanding for the year. Okay. So rent income here, we see the total is 33,000. Let's go back. So the total here is 33,000, right? That's the total rent income that we've received. Okay. But now they tell us that we were receiving 2,000, so 2,000 times 6 is going to give you 12,000. Okay, for the first 6 months. Second 6 months, it went up by 50%. So that's 2,500 times 6. So 2,500, you can even say this times 50% up, which is going to be another 6,000. So then that's obviously 18,000. Okay, went up by 50%. Second 6 months. Okay, so the total that we were supposed to receive, according to our calculations here, 12,000 plus 8,000, that gives you 30,000. Okay, but here it says we've received 33. Okay, so that means rent income we've received more than we should have. Okay, so that means that rent income, we need to debit rent income, we need to reduce it. Remember, we need to only reflect the money that we've actually received. So 33K minus 30. Okay, and that's going to then give you 3,000. So we're debiting rent income, and we're obviously crediting what account? Income received in advance. Okay, 3,000. Okay, right, guys, everybody still good over there? Just give me a thumbs up if you're still with me and you're happy, right? So that's the first part, or at least the first half of question 3. We still have these ones to account for. Lemon Traders, I heard something in the chat. I'm just going to read this and come to you. All right, Lemon Traders has an agreement with the local newspaper for a monthly advert insert. The agreement runs from 1 August, which is the beginning of our financial year, 2019, for 13 months. Oh, we know a year is 12 months, so if it's 13, that means we have 1 extra month there. All right, for a 13-month period, and is for 300 Rand per month. Okay, 300 Rand per month. Okay, so let's see what's going on there. Oh, but I forgot to quickly check how advertising is how much. Advertising is 3,900. Okay, cool. Let's proceed. 3,900. Okay. All right. So we know that we are functioning on a 12-month year. Okay. All right. Everybody is happy. Okay. If you're happy, I'm happy. Let's proceed. Okay. But if we times, and I'm just doing it quickly here on my calculator. If we times 12 times 300, you get 3,600. Okay, so like I was saying, there's an extra 300 in there that shouldn't be there. Okay, so this is then a prepaid expense, and prepaid expense, all right, is a current asset. Okay, it's a current asset, and what is coming down here is advertising. We only want what belongs to this financial year. We don't want anything outside of that. So that adjustment is done. Okay. So guys, the next time I see you, please ask me for your papers. Okay. Cool. Then it says interest on fixed deposit is calculated at 10% per annum. The fixed deposit was initiated 1 August 2019. Okay. So 10% per annum. This fixed deposit was initiated 1st of August 2000, so the beginning of our financial year. Okay, so we don't need to apportion it, in other words. Okay, but let's see if we have the right amount in terms of interest on fixed deposit. So how much did they say our interest on fixed deposit is? We have 40,000. Yes. So we had put down 40,000. So 40,000 times 10%, 0.10. That would give us, okay, 4,000. All right, but when we look at our interest income that we've received, where is it? Interest on fixed deposit is 2,000 Rand. So we are entitled to 2,000 Rand. Okay, so our interest on fixed deposit needs to go up. Okay, so we have accrued income, income that is owed to us. Okay. And here, just to show you the calculation, we're saying 4,000 is what is due to us, but we've only received 2,000. There you can obviously see that means that we have 2,000 that we ought to receive. Okay. Cool. And we said that is going to affect our what? Interest on fixed deposit. Okay. I'm sure you guys can tell. So it's trying to be as fast as possible. All right. Just trying to make sure we finish everything. Okay. But like I said, please do ask. Feel free to interrupt me switching on your mic and then ask, because then at least I know that you obviously are making sure that you know what you should know before you write your exam. The outstanding balance of a debtor, Mr. Sand, at the year end is 2,500. Mr. Sand has been declared bankrupt. A check of 25 cents in the rand has been received, and the remaining balance must be written off. No entries have been made in this regard. The subsidiary journals have been closed off. Okay, so any additional transactions are to be recorded in the general journal. Okay, I don't know why they're letting you know all of that, because either way, this is something that needs to be recorded in the general journal. So first things first, we've received 25 cents in the rand. So in other words, 25% of this 2,500. So that's the easy thing to record right there. All right. We know that when we receive money, bank is going to be affected. Okay. And then obviously our debtors control is also going to be affected. Why? Because now we have less money, less that is owed to us because a debtor has paid. So 2,500 times 25%. How much are we actually supposed to receive? Let's see. Okay, so we're supposed to receive 625. Okay, 625. Okay, right. So that's the first bit. Let's go back now to question. No. And the remaining balance must be written off. Okay, so this 75% needs to be written off. How do we do that? We know that, and the question, remember at the end of the question, let me show you. I need to show you this. It says ignore that. Okay, pay no mind to that. Okay, so I know when it came to our depreciation, we did pay attention to VAT because they had told us it's 23,000 including VAT. Guys, depreciation calculations always excluding. I saw this a lot in this question, in question 1 on the test. People were including VAT on things that already had excluding VAT. So they were ish. All they needed to do was their depreciation calculation, and guess what? They were then, instead of just doing the depreciation calculation, they were adding on VAT and then doing the calculation, which obviously gave them a wrong answer. All right. So guys, please take note of that. It does show how much you've been practicing. Okay. So clearly, guys, we need to make sure we're on top of things there. All right. Right. Anyway, back to entering this. Bad debt or credit losses. Okay. And this is obviously then going to be your, what is this? How much did he owe? 2,500 minus what he paid, which was 625, which will then obviously give you how much? Minus 25. Okay, that's going to give you 1,875. 1,875. Yeah. And here, debtors control is going to be affected. Okay. All right. So then you are done also in that regard. Okay, so let's proceed. Let's proceed. Okay. Then allowance for credit losses must be adjusted to 10% of the debtor's control balance after considering any adjustments above. Okay. Let's see what is the balance on our debtors control. Debtors control 45,000, sorry, 45,000. So what are they saying over there? They're basically saying we have 45,000, that's the total on our debtors control. But then we know that we had 2,500, some of which we wrote off and some of which we actually received, 625 in the bank, okay? But that's obviously completely going off our books. So then our total here is 42,000, sorry, 500. Okay, that's how much we then have on our books in terms of our debtors control. But then we need 10% of that, so 0.10, okay, which is obviously going to give us 4,250. Okay, right. Then that's what we want to adjust our credit losses to. Allowance for credit losses. We want to adjust our allowance for credit losses to that. So we go and we say, but wait, what is our current allowance for credit losses? And if you look there, you see allowance for credit losses is 3,500. So we're adjusting this upwards. Okay, remember allowance for credit losses, you can see it's in the statement of financial position. That is your negative asset. So if we're adjusting this thing, increasing it from 3,500 to 4,250, what are we doing to allowance for credit losses? Are we debiting or are we crediting that? Okay, the difference between 4,250 and 3,500 is obviously 750. So guys, are we debiting or crediting allowance for credit losses? Somebody tell me. What are we doing? Allowance for credit losses is currently 3,500. They want us to adjust it upwards to 4,250. So what do we now need to do? Are we debiting allowance for credit losses or are we crediting it? Okay, again, just in the interest of time, we're going to credit allowance for credit losses. Okay, and we're crediting that by 750 and allowance for credit losses adjustment, which we know is either the income or expense, is then obviously getting debited. 750. Okay. Is that the last one for question 3? I think so. Yes, it is the last. It was the last adjustment that needed to be done for question 3. And there you had 30 marks. So this question really wasn't bad, and you guys didn't perform badly on it either. So yeah, I was quite happy with that. So you see, this is unit 4. This is unit 4, your adjustments, and a little bit of unit 3 as well with your depreciation. Okay, right. So now I think, yeah, let's go on to question 2. Let's see how far we get. Maybe let's save question 2 for last. Let's go to question. Nah, no, it's fine. Let's go to question 2. It's shorter. Okay, prepare the property, plant, and equipment note. People were seeing stars here. It wasn't really not so good over here. But I think it's just they didn't anticipate this question coming more than anything. Okay, so guys, let's go practice those 2. You know, on YouTube you have exercise 13 and exercise 12. Is it 12 and 11? Sorry, exercise 12 and 11. Okay, so please go over those. They were dealing with property, plant, and equipment. Okay, so anyway, manufacturing machinery. We purchased the machinery 1 May 2017. Okay, remember here, we're doing it for 31 April 2020. Okay, so you want to do your timelines if you want to get this right. Okay, you have to be honest with you. And we sold it 1 January 2020. Okay, here, 220,000 excluding VAT. That makes our life easier. We're doing straight line. That also makes our life easier. And depreciation rate is 15%. Okay, right. So let me quickly do the timeline there, and then we will get started. Okay, now we can scroll up because this is where we are. Okay, right. So let's draw So we said 1 May is when we bought, and that was on the 17th. Okay, our next financial year will end on 30 April 18. Okay, and this is a straight 12 months. Okay. The next one will end on 30 4 19. And they said we sold 1 January 2020. Okay. Just gonna put a 20 there. So here we have another 12 months. But here we have less than 12 months. So we're saying May, June, July, August, September, October, November, and then December. All right. So that's 8 months. Let's do it again. May, June, July, August, September, October, November, December. Okay, 8 months. Okay, right. Now we need to quickly fill in. We're going to fill in this thing, our table here. I think I can zoom in. Okay, well, I personally would do the depreciation first, because then it just becomes so much easier, because now you can see. Okay, we're just literally just filling in. So let me use blue. The cost for this was 220,000. I still have a few minutes before your break. Okay, and that's excluding VAT, so we are happy. Okay. So let's begin to calculate. Let me change my utensils here. Let's do it here. So 220,000 times, what is the interest rate? 15%. I believe it was. Yes, 15% per annum. And that was for 12 months. I'm just going to write this out just for you guys to see. 12 over 12, which is the same as 1. So if you punch that into your calculators, you get 33,000. Okay. So remember, it's straight line. So we're getting 33,000 here, over here, and here, in both A and B. I can actually quickly just label these as A, B, and C. Okay, so let's go back. This is A. Yep, I'm just gonna actually just copy this because it's the same thing. And this is B. And then we have C, which is going to be different. Because remember, here we have 8 months. So if you punch that into your calculator, we're basically saying 33,000 times 8 divided by 12. okay, which then should give you 22,000. Okay, you add that up together, here you're going to get 66,000, yes, plus 22,000. You then have a total depreciation of 88,000. Okay, right. Okay, right. So now we've done our calculations for depreciation. Okay, remember, it's because we sold this thing on the first of January. So remember the format of these things is first carrying value on 30 April 2019. So basically here, what is the carrying value at this point here? Okay, beginning of C. Okay, so before we can go there, we need to punch in the cost. So cost exclusive of VAT here is 220,000. Okay, accumulated depreciation up until this point here. Okay, remember we had 33,000 in the first year, 33,000 in the second, so that is going to be that's what I wanted to do, 66,000. Okay. Okay, so 66,000 minus 220. 154. So the carrying value at this point here is 154,000. Okay. Right. Happiness there. Oh, we actually could finish this question before your break. Awesome. So we didn't add any equipment. Let's go back to the question. Let's see. Yep. We didn't buy anything. That was really literally the end of that question. So let's see. So here we're going to put a dash. We leave it blank. Okay, then disposal at carrying value. Okay, remember we want the disposal at carrying value, not the selling price. So we're saying, okay, cool. There was another 22,000 depreciation. So we're saying this 156 minus 22,000 to get the depreciation. So 154 minus 22, you're saying 132. 132. Okay. And then here, we're saying what was the depreciation for the year? It was that 22 that we calculated for C. Okay, so 22. Okay, so you add these two together. Can you see that? There's two negative amounts there. Nothing positive in terms of additions at least. Yep. And so the total that we're going to have here is a negative 154,000. Okay. To get the carrying value as at 30 April 2020, which is here, we're basically saying 154,000 minus 154,000. Okay, or plus 100 plus a negative 154,000, which obviously is going to give you 0. Okay, and that's why. And here you also have the cost is going to be 0 because we don't have anything new. And here, accumulated depreciation is also going to be 0. Okay. So this is what your question 2 was supposed to look like. Some of you even just left it blank because it was like, so we do not know what is going on over here. Okay, at least now you know. Okay, so do practice this. Be prepared for it if it comes in the test, sorry, in the exam. Okay, we're going to go through question 1 together. But I think it would be nice to give you guys a break. I'm sure it's time for that as well. Yep, 10:50 on the dot. So let's take a 10-minute breather, and I'll see you guys. Let me give you another 2 minutes. I'll see you at 11:02. Okay. If you have any questions, please throw them in the chat, and then obviously when we get back together, I'll deal with those first. Okay. See you guys shortly.